Yo, what's going on, everybody? It's your boy Huncho, making another YouTube video for you guys. Today we're going to be talking about my levels, how I chart my levels, and just to give you guys a little bit more insight of how I look at the charts on SPY, right? So I'm going to try to make this video pretty quick. It's really simple, nothing crazy. So first things first, I want to just tell you guys that I like to chart on the 15-minute. I look at the 5-minute most of the time when the market's open, but I mainly do my charting on the 15-minute. So I also want to mention that I do have extended hours on. I don't really do regular trading hours. I just like to have, just in case, we see these, overnight or pre-market pops, and sometimes my levels tend to tap them in the pre-market or in after hours. So I just like to have, just try to do my best to get my levels as accurate as possible, right? So a lot of people like to do regular trading hours, and that's fine. But I'm just telling you guys what I do. Whether you do it or not, it's not really a big problem. But I just like to have it just get a little bit more precise levels. Okay, so on the 15-minute, and so there's literally only 3 types of levels. There's support, resistance, and key pivots. That's my strat. So shout out to my boy. My bank is fat. Banks. I got a lot of my strategy from him. Literally, in fact, like 80% of what I use came from Banks. All right, so shout out to Banks. Really good guy. Super dope and transparent. And he's a dog trader. I learned a lot from him, and he was the only guy that I've actually looked into that I've gotten real value from, and that's actually has helped me. So that's just want to throw that out there because I don't want to take credit for this strategy. So it's literally just support, resistance, and key pivots. That's how I like to put it. I know he uses supply and demand zones, and I do use those sometimes, but mainly just those right now since I just traded OTD SPY options. So let's go ahead and get into charting. So first thing I like to look at, let's say on the blank chart, right? So we're on the 15-minute. Now key pivots, guys, I like to make them white. You can make them gold or whatever you want to be, it doesn't matter. But key pivots, guys, are basically my levels where they're like magnets, all right? They're levels where huge moves have happened. So either a big dump or a big pop, all right? So in other words, strong bounce, strong reject, same thing, okay? So I sometimes like to use the body. Sometimes I like to use the wicks, okay? But I'm gonna just I literally forgot how all my levels look like on my my main preset here, but this is just a blank brand new one. I got nothing going on, so I don't really remember. So if I were to go ahead and just start charting, this is what I would do. So I would start with key pivots. So key pivots would be all right, guys, so right here we would make this a key pivot. All right, so this strong reject down here, okay? So this would be 594.69. Okay, so we can go ahead and zoom in a bit just to get a little bit more closer view there. So you guys can do this as well. So you guys can use the wick as well. The wick is fine. I like to use the body because we have 1, 2, 3 body rejects, so that gives a little bit more confirmation. And at the end of the day, even if it does break above the key pivot, passes it, it's no problem for me. If I see a rejection out of there, I'm shorting the crap. So that's how I like to use key pivots for entries. It would be nice up here because we got this little nice dump here too, so that could work. So let's say 595.18. That's perfect right there. Okay, but you move it down here a couple cents, it don't matter. But basically areas where there's big bounces. Okay, so that would be a key pivot that I would have down. Another key pivot would be right here. So here's another key pivot, 599.41. So as you guys can see, we got this nice move to the downside. And also, you can see after hours, look what happened. And I know this because of the earnings or whatever, but it respected the key pivot. Boom, we got the tap and reject down. So we also got a overnight gap up and didn't tap it, but it was near the range. And then as you guys can see, we had to move down. So key pivot to key pivot. Also, as you guys can see, look, if you see this dump right here, if you look at the previous day, what happened in the open? We got a nice bounce to the upside. So those are key pivots. Normally, SPY moves this range right here. You don't always get these. It's because of these tariff news and crazy week we had. You don't get these $10 moves, $7 moves often. Okay, guys. So I would like it for it to be like that, but normally SPY is just $2-3 range, $4 range most of the times. All right. So those are the key pivots I would have down. Let's go ahead and try another one right here. So we got a nice bounce to the upside. This was actually yesterday, Friday, right? So we got this strong bounce to the upside here. And on my main chart, guys, I did not have this as a key pivot. I had it as a support level, right? Which they work. But I like to take entries I like to open positions off key pivots. All right. So that's just one thing for me. You can take them off supports. If you see volume kicking in, you can definitely. I do it sometimes, depending on the price action. But most of the times, I like to take entries off of key pivots. So that's those are the three of the key pivots that I would have down. Another key pivot would be right here. So then again, you can do the wick, or you could do the body. All right. You want more confirmation? This would be a nicer level. Because look, we got this nice sweep to the upside. Key pivot to key pivot. Then what happened? 2 days later, sweep to the upside. Key pivot to key pivot. And once we broke under, confirmation to the downside. That's when you can take puts. Once you get a nice close. Let's see if you were making wick. Look what happened. All right. So we still got a reject. You could have caught the whole move. But either way, you could just take puts off of here, off of this reject, and boom. So you can use bodies. I like to use the bodies of candles. But wicks work as well. So I would have that as a key pivot. So let's just go ahead and stick to those, and we'll add one more. So we'll make this a key pivot right here. All right, guys. This was the open right here as a key pivot. And then, as you guys can see, look what happened the previous day. We got a reject. Key pivot to key pivot. So this is how I would chart key pivots here, guys. All right. Nothing crazy. It's just, you guys are just looking at this and this is like, bro, he's just charting support and resistance. Exactly. But intraday, right? This is a big move, especially if you're playing like 0-day expiration contracts on spot. These are very, very nice moves to play. Okay, so yeah, doesn't look as amazing right now, but you want to beg for these moves when you're in these plays. All right, so yes, I like to have like special levels, and we'll go ahead and get into the support and resistance levels. Okay, so here we go with resistance levels here, guys. Or we could use it as support because it's above. So supports are under the post, market or whatever action is going on at the moment. So, if we were under it, you see, this would turn into resistance. But once we broke above, look what happened. Turn into support. So these are areas of support. And guys, just letting you know, the way I use these levels is whenever I get a reject off of them or whatever, my key pivot, whatever it might be, I like to, depending the price action or how much I'm up, I use the support and resistance levels as my, levels to scale. So I scale positions at these levels, all right? Because the reason why I have these levels is I don't have them just because of just to have them down. I have them because they're areas of interest where the market, where price balances or flushes, okay? So it's important for me to scale at these levels, okay? For me, a lot of times, price can just ram right through them, and you'll know when to hold, right? But once you see it get a little bit glitchy, I like to just play it safe and take my percentage. Whether I'm up 50, 60%, I take a portion off, and then usually I keep pivots. That's when I take a majority of my position off. So if we were to go from like this to here, from here to here, I would be out like 80%, 85% of my position and just leave runners. But yeah, so that's how I use like the support levels right there, and then we got the resistance. So here would be another like nice support right here, guys. So look, then again the body. Look at this sweep up here. Show you guys. Look at the sweep up here, and then another sweep, another bounce. Okay, so then again areas of interest. Okay, so those would be the support. Now we'll go in and do the rejects. All right, so the resistance levels. So here would be a resistance level here. I'm not gonna lie to you guys. This could also work as a key pivot, okay? Because this move from here to here is pretty large. So that could work as a key pivot at the end of the day. Look, if it's rejecting off of your resistance level, you can take puts. So it's not necessarily, the end all be all. It's if you see it rejecting off of your resistance levels, you can take puts and ride it down to the key pivot. You can just take puts, ride it down to the key pivot. That would be your take profit. Then you leave runners, and then you would bank. Okay. But let's say if I want a confirmation, like the way I like to play it, is I would wait for this whole move to happen, which we caught this move actually. When was this? Yeah, this was Thursday. I think we caught a big play here, but I forgot. This week was crazy. But I think we rejected over here, and I wanted to take puts, but it was literally 5 minutes, 10 minutes into the market. I needed some confirmation, and we ended up getting the confirmation. Once we broke the key pivot and held under, we rolled all the way down to 590, which was key pivot to key pivot. You see, key pivot to key pivot. So yeah, that's one of the resistance that we could use, and then we'll go ahead and keep going. Like I said, nothing crazy, guys. It's literally simple. You guys are probably looking at this and just like, what the hell? I already knew all this is simple. But I'm just sharing how I look at them. What goes on in my mind when I look at these levels. All right, here's another one. Okay, this could also work as a nice key pivot play, but resistance. You see, so I would have this as a resistance, and another support would be right here. So we could use this. See, guys, we had a nice bounce here and a nice sweep here. So this could probably work out even as a key pivot as well, guys. I'm not even gonna lie. But let's just say it's support, right? So that would be a support level right there. So just areas of interest, okay? The reason why I do it on the 15-minute is because, guys, on the 15-minute, you're more probable of taking the trade off a 15-minute confirmation and getting a greater move than getting it off a 5-minute. If I take a position off the 5-minute, even if it might be the most bullish candle, okay, that's not enough for me to go with such confidence for it to be a great move. It could be a dead cat bounce. It could literally be a 20%, 30% bounce, okay? The reason why I chart 15 minutes is because these setups are more probable for a larger move. For example, guys, let me give you guys another key pivot here. Look at this. This is perfect. Okay. 607.29. Bounce to the upside, and then once we broke under, retest, boom. Perfect right here, guys. This is 1,000,000% here. But look, key pivot to key pivot. Break, retest, key pivot. All right. Let's do another key pivot. Bam. And look right here. Break under, hold under, key pivot to key pivot. Retest to key pivot, rejected, all the way down. Boom. So these are really dope areas, guys. And obviously we'll go back to charting the supports. Look at this. So you see these sweeps, and then we get these nice bounces. You could take trades off of this. You know, if you don't want to take it off the key pivot, too much choppiness going on, you know, you can wait for one of these levels, close above one of these levels, and ride it to the upside. You know, same thing right here. Go taking puts right here and just ride that. Another way. And also look at the support too. Look at a couple of days earlier. Then we'll go ahead and do more. Look at this. End of day bounce. And then open bounce. Boom. See what I'm saying? And then look, even if you couldn't take this, with a retest above key pivot, take longs. Boom. It's literally, guys, I like to use these as ping pong, okay? Like my boy Bank says, he likes to use these as, like, you know, these levels, they like to ping pong each other, okay? So I just play the levels, okay? I don't know what the market's gonna do. This is why it's important to manage risk. But look, if I see, you know, a candle like this off a key pivot, I'm shorting the crap. I'm just telling you guys, okay? I don't care if it goes green. I took the position, and my stop is a close above. Okay, low risk. But when I see a large bounce off of here or a reject, I'm in that position, long or short. That's how I like to use my key pivots, guys. Nothing crazy. Just, you know, I like to look at levels of interest, and I just ping pong them. You know, nothing crazy. It's almost like support and resistance, but just how I like to look as my own little way of looking at it. All right, now indicators. This is all I use here, guys. Ready? Can't even spell. Moving average exponential. To make this white. The 90 EMA, guys. This is the trend. This is the trend king. This will tell you when to stop out of your runners and when to hold your runners. Okay? Now, I like using the 90 EMA on the 5 minute. What the hell? My bad. I'm tripping, guys. Alright, 5 minute here, okay? If you would have taken calls off of this, look, close above the 9. You can use these as entries too, guys. 90 EMA indicators are perfect, okay? If you missed the level entry, look, if you missed that, you just take off a close off of the 9. Boom, ride it down. And then just close a position, leave runners. Could have got the rest of the juice down here. But let's say if you had like a couple runners left, all right, boom. Close above the key pivot. You exit the trade. That's it, right? So I love using the 90 EMA. And then the last one, which everyone in the world uses, is VWAP. All right. I don't use all that mess right there. Bag's about to die, so I'm about to finish this real quick. VWAP, 90 EMA, and volume. That's it. Alright, guys, so look. This is how we're looking at the market. Market open. I will see this sweep off the key pivot to the upside. Look. Next bullish candle, I'm in puts. Look at this chop. I don't care. I'm not in puts. My bad. I'm in calls. Next bullish candle, I'm in calls. We get a nice hold above the EMAs. I'm holding above VWAP. Until I get a close in the VWAP, I'm in calls. And look what happens. pump, reject. Look what happens. Bounce, pop, sweep to the upside, level to level, ping pong. I do not care if I am red. I've been down $600. I've been down $1,800. I don't care. I'm playing my levels and I'm playing the range. That's it. All right, guys. So that's just my strategy. I know it's literally very amateur and it's unprofessional and it's stupid, but if you look at the track record, it seems like it works. Okay, so that's a little bit what goes on in my mind, guys. I just wanted to share that with you guys. Just how I look at the market, and that's really it, guys. The only thing that I struggle with sometimes is managing risk. Obviously, like I take more dubs than losses, but I need to work on not having my losses as great as my wins. Okay, so that's one of the things that I feel like a lot of people miss out on is like, you can know all this and this is very, very easy. That's fine. Anybody can play this. Any dummy can just look at this and just buy puts, make money. Okay, but the game is this. Trading is 10% technical, 90% emotional. Okay, if you cannot control your emotions, okay, if you cannot, withhold yourself from panicking because you're red and you stop out and you didn't even receive confirmation to stop out, you were just scared, and then you end up could have making bank if you would have held, all right, then it's going to be very difficult for you to be profitable. Okay, so this is easy. This strategy is not hard. Anybody could get it. Okay, the goal here is you want to practice risk management. A lot of people that I've talked to, most beginner traders, including myself, even to this day, a lot of times I take losses sometimes that I don't want to take, right? And I can choose to take it or not. That's the thing, because you can control it. Now it's all up to you to find a strategy or start with a new method of sizing. If you're over here panicking in your entries, the reason why you're panicking is because you're oversizing. That's it. Okay. If you were going in one contract of these plays, you wouldn't give a damn if it went green or red. Okay. So try working on risk management. If you can have proper risk management in these plays, you're on the path to profitability. That's it. Okay. So before I get into a rant, I'll drop more videos later on like trading psychology, things that I've learned a lot from psychologically in trading, which is, I think it'll be helpful for you guys. If you guys want those type of videos, go ahead and leave a like, a comment, and subscribe to my YouTube channel. Follow me on X, ITM Huncho. I have a link in my bio that goes to my Discord. Central Capital, we have 300 plus members, and we're on the route to making it one of the biggest, most valuable Discords ever seen this year. Okay, so love you guys. This is your boy Huncho. Let's continue winning. Stack the bread, and greatness awaits.